Ekta's with us to run us through what do we expect out there. Ekta, morning.
Hi, morning Nigel. Well, with regards to Aurobindo Pharmaceuticals, we are expecting a subdued quarter this time round. So the revenue is expected to be flat at around 4,400 odd crores. EBITDA is expected to decline around 15 to 17 odd %, with margins at 21% versus 25%, and a profit decline of over 20% on a year-on-year basis. Now, the reason for this is basically the company will be impacted due to a high base due to the kidney drug Renvela generic sales in Q2 of FY18. Remember that Q2 FY18, the revenue was up around 17.5 odd %, EBITDA was up 20%, margins 25%, and the profit was up 29%. So there is that high base which will come into place. Which is basically supported by the US market's high base, and also pricing pressure will have its impact. Now, in terms of the other markets, Europe, is supposed to be a growth market, so that momentum is expected to continue. Q1 FY19, the European Union market was up 31%. Growth markets were up around 32 odd %. Antiretroviral sales, which is basically your anti-AIDS drugs and your anti-malarial drugs, is expected to be impacted. We've seen that with other companies this quarter, such as Cipla, especially Strides. All of these companies have seen a decline in their ARV sales. So that trend is possibly going to continue for something like an Aurobindo as well. So overall, watch out for a subdued quarter for Aurobindo.
Okay, it was a subdued quarter expected from Aurobindo Pharma, but Quater was able to report a bit of overall improvement when it comes to the operational performance, isn't it?
Yes, absolutely. Well, for Quater, it wasn't a bad set of numbers if you actually look at it in as a whole. It obviously doesn't look like, it's still loss-making. It still made a loss of around 30 odd crores this quarter, but the revenue is up 10% year-on-year this quarter. It's up around 11 to 12 odd % on a sequential basis. The EBITDA loss or the EBITDA has come in at around 67.42 crores versus 21.3 crores year-on-year. So the margins for this quarter was 6% versus 2.1% year-on-year versus 0.4% Q-on-Q. And this is including the forex gain. So they had a forex gain, and inclusive of that, the margins have come in at 6%. Loss 30.8 crores versus 8.8 crore loss on a year-on-year basis. So that too has reduced. Overall, the company said the US business was up 18% in rupee terms, which is 17% of the revenue, and the emerging market, revenue was up around 68% to 144 crores. So overall, good set of numbers which came in for Quater on an operational beat basis, but their issues of the plant, etc., continue.
Okay, all right, Ekta. So those are about results, but let's focus away from earnings then. Let's move on to some data that's expected later today. CPI, October CPI numbers are expected, and September IIP numbers are expected. Ekta, what do we expect there?
Well, for CPI data this time round, we are expecting it to cool off on a month-on-month basis. So CPI is expected to come in at a sub 4% figure, which would be the third consecutive or fourth consecutive month that CPI would be sub 4%. So it's expected to come in at 3.6% versus 3.77% month-on-month. Core CPI is expected to still remain sticky at around 5.8 versus 5.81% month-on-month. So remember that core CPI has been sticky within this range of 5.8 to 5.9%, and hence, despite the headline figure being subdued because of food inflation, it is definitely going to be some core inflation which the street will watch out for as well. So remember that food inflation in September was 0.5 versus 0.3%, and vegetable was in a deflation of 4.15%. So this unusual soft patch for food inflation is expected to continue into this month as well. And remember that October was quite a volatile month in terms of highs and lows for crude prices. And that is expected to reflect in terms of the little bit of volatility that we could see for CPI data. Coming to the IIP data, if we could just pull up the numbers for IIP, it's expected to come in at around 4.1 versus 4.3%, and that will be a softening on a month-on-month basis. Remember, core data for September, which is 40% of the IIP, is already out, and that had softened to 4.3 versus 4.7%. We had coal, steel, cement, fertilizers, refinery products, all of them grow. So overall, we are expecting a little bit of a sluggish softness which would come in the IIP data. Remember that passenger vehicle production was slowing. However, commercial vehicle production was quite strong in the month of September. PV sales fell for the third consecutive month. CV sales were up. September manufacturing PMI also actually inched up to 52.2. So overall, same sort of trajectory for the IIP, but it's expected to soften month on month.
Okay, so both IIP and CPI expected to soften a tad bit. Thank you, Ekta, for that. We'll let you go on that note. But time now for a quick break. Up next, we'll get you a check on the cues to watch in the derivative space. Stay tuned for that.